Hey everyone, Chris Johnson with Monument Traders Alliance. Silver has been on a rip, up more than 150% in 2025, and it looks like we're going to see it continue into 2026. I'm going to spend the next 5 minutes or so walking you through the 2025 performance, as well as why silver prices are exploding and how it's likely to continue into 2026. And most importantly, I'm going to leave you with two simple ways that you can trade this white hot trend in silver in 2026. One, that's going to give you 45% returns based on my outlook. The other, up to 200%, and there is your 5x potential. Let's talk very quickly about what happened in 2025. We saw silver roll up 150% returns, and if you were trading it at the end of the year, you saw a lot of volatility. I'm going to get into that in just a second, the reason and why you shouldn't let it be concerning just yet. We haven't seen a year for silver like this since 2020. Obviously, we had another set of drivers that were in place in 2020, most of those pandemic and fear. Fear is still very alive, but look at the difference here. Everybody talks about Mag 7, Mag 7, Mag 7. Well, guess what? Mag 7 did not perform in 2025. You get an average of 20% return for that group of 7 stocks. Obviously, Microsoft in the basement there with negative 12% returns, and you've got NVIDIA, the king of all trending stocks, right? Returning 50%. You saw 50% from gold. NVIDIA is getting outpaced by gold. These old precious metals that everybody's kind of thrown away are coming back in vogue, and there's a big reason why. The bottom line, though, that 150% return, a lot of people looking at that in terms of silver and saying, no way, this is the end. And it's not. We're going to continue to see silver demand exploding. And that's what you get down to here. This is not just a story of the traders taking control of silver. Long gone are the days of the market getting cornered. No, this is a much more robust market. But what is happening is solars, EVs, grid updates, and think about it, data centers. Even though we're hearing a lot about data centers may be getting pulled back on demand, that is not going to stop the infrastructure that goes into them becoming developed. All of that adds up to industrial supply. We talk about Dr. Copper being that economic PhD, right? And if you watch the prices of copper, you expect to see them drive higher when we see economic growth, expansion, right? Silver and gold are just as industrial. Now, the difference between silver and gold, obviously from a trader's perspective, is volatility. Traders love volatility. It's always been more volatile than gold, but right now that trend plus that volatility plus the industrial applications are letting it soar much higher than gold, and that's going to continue. As I said, the AI data centers quietly driving connectivity demand. Risk off and rate cut setups are attractive to investors. What do I mean by that? Let's take a look very quickly at one of the things that I think you can use to gauge risk on and risk off, and that is Bitcoin. Simply put, a lot of people think that Bitcoin is a store of value, right? And that's all good and well, except when you see volatility in the Bitcoin market. Now, I just said volatility is a trader's best friend, right? It's a little different. Think about this from a perspective. If this is a store of value, then people are liking it or making it a little similar to bank accounts, right? A store of value. Or putting gold in a safe, a store of value. Bitcoin is not that store of value. We like to think it is, and obviously there's some usability there that's a lot different than having gold in the bank or in your backyard in a Hillcut Brothers can, as I like to say. But here's your trend right now in Bitcoin, and we've seen it pull back more than 30% from those highs that we posted in October. The reason, and right here, you've got a death cross from that 50-day and that 200-day moving average. This is what I refer to as a risk off move in Bitcoin. So in other words, the risk appetite for investors in general has gone down. And what does that mean? Well, it means that they're going to start looking for actual stores of value out there in the market. And when they do that, silver and gold pop up to the top of people's lists. Now, a little bit of the buzz around gold obviously and silver is going to keep that fuel going, but the volatility is also going to be there as well. One thing I tell everybody is that you just want to play this by the trends. So as we work our way into 2026, look for that risk off and interest rate situations to continue making silver and gold more attractive. Also, weakness in the US dollar. We can get to a chart later of that. But add all of that, or to all of that, you've got sovereign buying of this. So in other words, central banks around the world, not just in the United States, are starting to load up on gold and silver. It is becoming one of those assets that people want to hold. A lot of people talking about a shift from the dollar being that reserve currency. All of this comes into play to increase that demand and explode it into 2026. None of those geopolitical events are going to go away. The uncertainty around the dollar and interest rates and all of that are feeding silver and gold right now. And let's face it, the traders are in charge of silver. Risk-off trade combined with the industrial use case for silver makes it more attractive than other risk-off type of assets, hard assets we call them. So what's the technical setup here, CJ? You're talking to me about why gold's going to go higher. What about the chart? Well, the SLV moved 25% on a closing basis over the last 5 trading days. Let me show you what that is on the chart. It's this part right here. That little movement all over the place, last closing days of 2025. It's got investors saying, hey, maybe this is the end. There's a fundamental reason that's going on here as well. You've got an increase in the margin requirements for holding silver and gold. So what's happened is right now, those exchanges or those entities that control the margins on these precious metals, how much you have to have in your account in order to trade, hold them, the futures contracts, etc., they have increased that. So what that does is and the reason they did it, more importantly, is because of the volatility that we have seen in silver. They don't want to see a meltdown in the market turn into one of these situations where they have to start going out and doing those margin calls on accounts more quickly, and that causes selling immediately to cover those margins. So they went ahead and they were proactive and increased the margin requirements for those accounts, and it affects how much silver you can hold, right? Or you have to put more money into your account to hold that margin silver. So in this case, we've seen 25% round tripping here over the last 4 or 5 days. That volatility equaling an opportunity. You can see that right now we're sitting around that $65 level in silver, and from a chart perspective, you've got some support there. But the setup as we go into 2026, this is just looking at the last few days. That trend in the 50-day moving average, as well as the positive trend in the 20-day moving average, tells you that this is a trend that is going to remain friendly for silver. We've seen one healthy pullback, and that was back in October. We saw about a 17% pullback in silver prices. But again, holding on to those long-term trend lines tells me that we continue to look at silver into 2026 as a long-term hold. Now, let's go back to that table for just a second, because I did point out we're still 7% above that 20-day moving average and 30% above the 50-day moving average. We see, as we did in October and as we're seeing right now, we pull back 9% and the buy the dippers come out in hard fashion right now. The same pattern that's seen in technology stocks. I remember, and you remember, 2021 and even 2022, where you saw a lot of buying the dip on those magnificent 7 stocks. And guess what? That's what makes them resilient. We have more people that are wanting to get into this trade. It's not as crowded as it can get. I see us moving another 45% higher before that happened. And as I've already said over and over, volatility equals opportunity, and silver's price volatility is 7 times that of gold right now. So investors are looking for gold as a hard asset, as a safe haven, especially as Bitcoin continues to see that pullback, that deepening dive. And if we head into a bear market, which we're right on the cusp of right now with Bitcoin, you're going to see these hard assets come more in demand. But all of that is fueling that trend, along with the traders' like of that volatility in silver. As I said, volatility plus a strong trend is always a trader's best friend. So let's take it down to what do I do, or when does this end, CJ? Before you get to the trade, How do I know when the trade in silver is over? I already mentioned it's not really a crowded market. One thing, and I'll talk about this on Monument Trader Alliance Live, MTA Live this week, talking about sentiment. But when do you know to get out or to stop buying the dips? And this is critical, especially with something as volatile as silver. The first thing I look at is sentiment. I want to know whether the market is overly optimistic, whether they're over their skis on a stock, an index, or in this case, an asset like silver. Whenever you can't stop hearing about it in the news, CNBC, Bloomberg, etc. Whenever this is a great one, when your neighbor is coming over asking you about silver prices, that's the point where you say, no, this is now an absolutely crowded trade and I need to stay away from it. We've not seen any of those signs of sentiment. So you've got to look at the technicals on silver to decide when it's time to at least pause. I always use a simple technical measure to gauge when silver is ready for a long-term reversal. 15 to 20% corrections, they're healthy. They're the norm for silver. That's where we see the buy the dip crowd come in, and they come in strong. In my case, I'm using a bearish crossover of the 20 and 50-day moving averages to gauge when I'm going to pause my silver buying. It's going to take more for me to actually sell everything. I'll take profits on large positions that have large gains whenever I see that crossover. But let me show you what that looks like. It's a pretty simple chart. It's literally when that 20-day moving average on silver moves below the 50-day. So in this case, it's that red line moving below the green line. And notice it has not happened since, you guessed it, maybe you didn't, April of 2025. Remember when we had that panic and everybody ran out of every asset when the tariffs were announced? Well, situation was no different in silver. We saw silver pull back. It was around, I believe, 17%, 19% pullback over that 2-day period, and you pulled back to that 20-day moving average. At this point, you see the 20-day crossing below. That's where I pause my silver purchases. I don't stop them because I still have a bullish 50-day and I still have a bullish 200-day. So the trend is still my friend. But this is the point where I say, hey, we may have more of a consolidation on our hands. Let the prices, which never lie, the headlines can lie, everything else can lie, but the prices can't. So let the prices tell us where it's going to go, and I'll be darned, look at what happened. We broke that 20-day above that 50-day, and you caught a 19% run since the beginning of June up until the middle of July if you just followed that one simple trend rule. So that's when I decide whether or not it's time to get out of the buying mode. And again, if it were to reverse and that 50-day goes below the 200-day, which is what we call a death cross, which, ironically, if we look back at that chart of Bitcoin, we've already seen. We saw the market, or we have just recently seen that Bitcoin death cross. Let's get it over to the current chart here. And I'm going to get to the trade for you guys in just a second. But there's your death cross. That's the point, even with silver, where I say, okay, this is time to be emptying my profitable trades and taking losses on anything that I've added to recently and just getting out of the way as a deeper dive and a likely bear market is getting ready to take hold. When you look at the Bitcoin right now, look at that monthly chart. Those of you that aren't familiar with technical analysis, you may just apply the rule of, hey, if something's down 20%, which Bitcoin obviously is, but right here, that 20-month moving average, and that's what that red line is on a monthly chart. When we break below that, that's what puts you in a technical bear market trend. Bitcoin right now balancing, trying to stay out of that. If we break below and start head to that 75,000, I think you get a 60,000 mark out of Bitcoin, and that is going to do nothing but turbocharge the trade in silver. So if we're looking for that turbocharged trade in silver, let's go back to my slides here and talk about when I'm not pausing my dip buying and when I'm actually going out. Two different ways to trade silver right now. Low end target is $100. $100, you're trading around $68, $70 right now. Let's say you're bouncing around $65. That $100 target is going to give you about a 45% gain. The way that I trade that is I just go out and I buy the SLV. SLV is the iShares Silver Trust. The ticker symbol is SLV. In this case, in my opinion, it is the better way to hold silver, especially if you're trading it. You can go down to the Costco, you can go down to the coin shop and buy silver coins and be successful. Obviously, you're going to be watching the price of silver, and it continues to go higher just as it does with the SLV shares. But if you think about it, the ETF in this case that offers, they say they can deliver the physical silver. That obviously is probably not the case when we have a run on it. Remember, they're going to have those margin requirements applying to them as well. So a little bit of a hit on their prices, but nonetheless, that is the most simple way to go out and buy it for any account. You can put it in an IRA, you can put it in an individual account, you can put it in your child's account if you like. So think about that as the easy way to trade SLV with the 45% gain. My stretch goal for SLV is $150 to $175. That's 160% return in 12 to 18 months right now. How to trade it, as I said, simple, buy and hold with the SLV. Don't be afraid to buy the long-term trend in those silver shares, and remember my rule on using that 20 and 50-day moving average as to when you're going to pause. Volume trading volume right now is up 250% on the SLV shares, so the buy the dippers are alive and well. If you wait for a 20 to 30% correction, we've seen a lot of volatility here at the end of 2025. I think you'll get rewarded with some lower prices, but don't wait too long, because when this rallies, as we saw back in that June and July of 2025, it takes off and goes parabolic. I've got an option strategy. This is my preference. This is the way that I trade, and full disclosure, I do have long call positions on the SLV. Right now, the January 2027, it expires January 15th, those 70 calls, so they're just a little bit out of the money right now. They're trading at about $1,350. For that $1,350, you get the right. You don't get 100 shares, but you get the right to control 100 shares. You can exercise it at any time before that January 15th, 2027, and they'll deliver 100 shares of silver to you. You have to pay for them full price, but for now you only have to pay $13.50 per contract. That's the price of about 20 shares. So for 1/5 of the total value, you can control 100 shares of the SLV. And that's what is so nice about these long options. It also limits your risk. If, for some reason, silver were to collapse and go down to, I don't know, $20, let's say, over the next couple of days, I don't care how long it is, you still only have $1,350 on the table. Let's look at how this could play out for you. And this is using theoretical pricing from the Black-Scholes model. I try to do this anytime I start talking about an option versus a stock. Hypothetical based on that Black-Scholes long-dated SLV calls versus shares. As I mentioned, $13.50 is what you're putting down. And to buy the same 100 shares that you're controlling, you'd have to put down $6,874. If we go up to $100, intrinsic value on this is going to be $3,000. That's the 1,000. That's the 100 minus rather the $70 of the strike price of that. That gives you a 122% return compared to 45%. And that's if it were worth that $100 on January 15, 2027. If it happens sooner, you're going to have a lot more value because time value, time premium is still in here. Let's say the same option trading by 150, my stretch price. Well, that option's worth $8,000. And that's a 492%.6 versus 118% on just holding the SLV shares. You're at 4.2 in terms of that multiple, and you're getting up, obviously, towards that 500% return, which is your 5x. You can play this out a number of different ways. I always tell people, go out there and start using options calculators when you're talking options, because you need to understand exactly what drives the prices. How much are you going to go up if it goes up 10%, if it goes up 20%, if it happens over 30 days, 60 days. I'll get all into that on one of our MTA live sessions. Make sure you go to the website and sign up so you get those notifications. But as I say, always know where your option's going to go based on the underlying. And as I mentioned, I'm going to use that 20-day, or that, I call it a lot of names I call it for, but that negative momentum situation of the 20-day crossing below the 50-day on the silver to actually give you the indication that it's time to stop buying. And if we go into that death cross situation, it's time to stop considering silver as a long-term trade. You can always go to monumenttradersalliance.com. Get more information not only on the silver trade, but all kinds of content, including our trade of the day that we'll put right in your email box. You can sign up for that down below as well. Till the next time, I'm Chris Johnson with MTA Live. Make sure you come and visit me once a week. We're doing educational, and we talk trades just like this live on our stream. Hope you have a great 2026. And as always, I wish you the best trading success. Have a great day, guys.